now live from Melbourne. And just in relation to this Graincorp story, I mean, what are you hearing on the ground? Are you hearing any more details about a potential formal proposal emerging?
Yeah, morning. Absolutely. It does seem like that's the sort of situation that's emerging over there. Of course, this morning, that's one of the main stories that was just doing the rounds and amongst the floors. It just certainly seems like the general consensus is there will be some sort of a bidding war for Graincorp should this talk turn out to be correct. Of course, that premium suggests that they know they need to do quite a significant amount to be able to get it through. Of course, Graincorp's the main agribusiness remaining listed in Australia. They've got a lot of strategic assets, and it does seem like there will be quite a lot of interest for the company.
We see that price, do you think, pushing if it is a full takeover, and certainly if it's not a full takeover when shares do come back online?
Yeah, absolutely. We'll probably see them trade significantly higher. Of course, just speculation is enough to get a lot of traders excited out there. We haven't had too much activity going on for a while now, so definitely some sort of corporate activity with Graincorp would see quite a big move in the share price.
Equities seeming quite toppish. Some saying that they're starting to see investors move out of fixed income back into some of those equities as those yields are still quite strong. Certainly those banks profit taking there, though. It doesn't seem they're getting any attention leading into their results.
Yeah, no, it does seem like generally markets have been a little bit toppish. Investors are getting very nervous at those higher levels. That sharp reversal we saw yesterday into the close just definitely shows that investors are now at that stage where they're looking for any small reason or excuse to sell into the rallies. We're also getting to that stage where technical analysis and fundamental analysis start to clash. Of course, the technical analysts will tell you that trend's your friend. Keep riding the uptrend and obviously play on the stops to keep locking in further gains. At the same time, the fundamentalists will be telling you that equities are looking a bit expensive at these levels. We'll probably wait to see a healthier pullback and some consolidation into that 4,500 level before starting to commit to fresh entries. So it's definitely an interesting space for a lot of these equities at the moment. Of course, the main issue with the Australian market is the recent recovery has been led by the materials space. So you could argue that that underperformance that we saw in the materials is now helping them play a bit of catch up and helping support the market.
UBS says they're going from the banks into the resources. Do you agree?
From the banks to the resources,
yeah.
It certainly seems like that's the case. Of course, with NAB coming out this morning as well with that downgrade.
Yeah, they've raised provisions for weakness both here and in that UK market, $250 million.
Yeah, absolutely. I think the main two things to take away from this, firstly, they said they expect cash earnings to be flat. Now that implies cash earnings of about 5.46 billion. Most of the consensus was for NAB to report around 5.7 to 5.8 billion. So that's quite a bit of a downgrade to earnings relative to the consensus there.
And shares down 3% as a result of that.
Thing is, Stan, when was that consensus call from the analysts? Because, you know, it was only a few weeks ago that the IMF and the World Bank were scurrying to revise growth projections for that whole European region, and the UK is not excluded from their projections. So, you know, why is the market getting ahead of itself? Isn't it better that a company would be under-promising, over-delivering in this sort of environment?
Yeah, it does certainly seem that way, but you look at the price action that we've seen in the banks, it definitely suggests that there was a lot of optimism around their earnings there. Of course, they've managed to consistently grow earnings, particularly the Australian banks, for a while now. So I don't think analysts were in such a situation where they thought this would necessarily hold the ratings back from.
Yeah, but if they got rocks in their heads, I mean, every second analyst we talk to, ex-banking analyst, says to us, loan growth is anemic. We're not even in recession. Little wonder that they've had to increase their cover for impairments because of what the UK is going through, which is in recession. And therefore, loan growth must be on its knees there.
Yeah, absolutely, and that's definitely one of the main issues that's been cited by the analysts when it comes to NAB. So it actually seems like that consensus is definitely very conservative as well, just compared to what we've seen for the likes of ANZ and Commonwealth Bank, for example.
But
So
isn't NAB
I don't
outperforming
think
on the
it's too much of a change.
deposit growth? Because isn't that a shift to that story now? It's all about the deposits because of the lack of loan growth.
Yeah, exactly. Absolutely. I think you also have to look at, for example, what they said about their dividend. They're expecting 90 cents. The analysts were at a consensus of about 92 cents. I think JP Morgan was the highest at 92 cents, with most of them coming in at about 91. So I think overall it does seem like everyone was fairly optimistic about the banks, and with what you're saying, like with the loan growth remaining anemic, we've got their UK business, particularly for NAB, has been struggling for a while. Downgrades to economic forecasts, then we should probably start to see some sort of a pullback in the banking sector. They've had a big run over the past few months, and everyone's just been looking at those dividend yields and saying that's why we continue to see that sort of support. But it was certainly free money for a lot of investors who were thinking, hang on, I can just make 9% yield from holding the banks, so why not? Even if I don't get that share price appreciation, even if earnings slightly disappoint, we're still going to get about a 9% yield on the dividend end, so why not?
To be precise, the fully franked full-year dividend 90 cents is a 4.7% rise on year, which, as you say, in this environment, naught to sniff at. Thank you, Stan. Talk soon.
Cheers.
We move on for you now. We tell you about lawyers for Maurice Blackburn now. They're taking NAB to task now in